so much to all of our panelists. What a great session to get us kicked off today. I thought the most poignant statement was one that Seth made about how prepaid is not a product anymore. It's really about the consumer need. Flexible, accessible, comfortable consumers, high acceptance rates from merchants, and running on the existing payment rails. And that's really what we're here to talk about today, is not how prepaid used to be just a singular product, but really what this platform is and what it can do for the future of digital banking and financial services. I also thought it was great when Leslie said that the truth is that prepaid is for everyone, and that is not something she knew until she came to work at Coho. So great insights from our panelists. We very much appreciate them coming here today. So our next panel that we're going to move right into now is about erasing the lines and how embedded finance is allowing non-financial brands to offer financial services. We have a large, diverse, and terrifically experienced panel to talk about this today from a number of angles. I'm going to be leading the discussion, and I'd like to introduce our panelists. First is Kelly Knutson, President of Netspend and Senior Executive Vice President at Global Payments. Ellie Zoladra, Director of Product Development at MasterCard. Howard Klein, President of Payments and Card Services at People's Group. Brandon Spear, the CEO of TreviPay, and Michael Supa, Head of Payments for Canada for PayPal. Thank you to all of you for being here today. So let's just dive right in. We want to talk about the use cases for embedded finance. And for a lot of people who may be on the phone here today and streaming with us, it's a fairly new term. And so I'd like to do a bit of a round robin and find out how your organization views the concept and the use cases that you are leaning into. So Kelly, can we start with you?
Sure. I think first of all, for us, we believe embedded finance and the banking as a service model is here to stay. And there'll be a lot of players in the ecosystems that we operate in. We believe strongly that there'll be kind of 7 or 8 branded ecosystems the consumer spends most of their time in, either to transact, engage, share information, collect rewards, etc. And we think within each of those branded ecosystems, people will want to move money around. So money movement's a key ingredient. We also think that there'll be an assortment of financial instruments that they'll be looking for, whether it's a core DDA or debit account. They want access to credit, access to insurance, etc. And so I think going forward, we're going to have to change our mindset from this product mentality into really what role we play within that bigger branded ecosystem. And for us, we're taking our products and services and solutions into our retail distribution channel in a very select way. We're moving into gaming because we do think that's a big vertical, that there'll be a lot of activity and money flowing in and out. We believe strongly in sports and entertainment venues, especially now. Things are opening back up and the whole cashless concept within venues will be important. We also believe healthcare and the role of different tiers of healthcare and movement of funds and claims and invoices within that ecosystem will be important. So for us, we've moved way beyond prepaid, but using our core program management capabilities to play a role within these branded ecosystems.
Thanks, Kelly. Howard, I saw some nodding from you. Love to kind of have you follow on there with the issuer perspective.
Yeah, I echo a lot of what was said. We view it as a distribution mechanism for our financial products, right? Ultimately, we're a sponsor institution, and we work with program managers. And as you mentioned earlier, prepaid what used to be something very different than it is today, and we look at kind of embedded finance in the same way, is that it's a mechanism for us to distribute, loans, credit cards, savings accounts, GICs, mortgages, and removing the friction that used to exist in, when you think of banking and having to make an appointment at your branch to go get a mortgage or go get a loan, and how you were disconnected from the main use case of why you were getting that loan for. And so we're really bringing the ability for our partners to bring financial solutions into their ecosystem without having them to get into the banking space and having to worry about all the regulations and all the things that go along with that. They just want to remove the friction for their customers and enable them and empower them, to do what they want to do without having to leave and get all that friction, into the ecosystem. So that's how we look at it.
Makes sense. Brandon, I'd love for you to tell our audience a bit about TreviPay and your kind of B2B focus.
Yeah, sure. So thanks very much. So I think, like everyone has said, this is definitely a space that's here and now. From our point of view, we focus really on the B2B interactions, and we focus very explicitly on the needs of selling organizations. And so for us specifically, we lean into all the ways that a selling organization can get paid, all the ways that they might be extending credit or using credit, and ultimately how they're going to be dealing with working capital and managing their working capital. And so to really successfully execute in that space, and I know this group all knows that, you've got to be really competent at having an easy way for those customers, those distribution channels, the way Howard referred to it as, to quickly and easily consume your solutions, to be able to access what you do via APIs, to be able to easily curate the whole customer journey. So particularly because we focus on selling organizations, the customer journey is often critical to how they execute. And again, particularly in a B2B relationship, there's often more friction in those customer journeys than there should be. So trying to take the friction out, exactly like Howard said, is a big piece of what we focus on. In terms of specific verticals and where we go, we've had a lot of success in manufacturing and retail. Believe it or not, a lot of retailers have B2B channels that they accidentally serve, they don't proactively serve. And so we often help them in formalizing those execution strategies with those B2B customers. Manufacturers are also often dealing with the changing nature of their supply chains and how they go to market and how they distribute the things that they sell. And so that often creates new dynamics that they have to deal with, where they might be selling more directly to end customers and not necessarily through distribution channels anymore. So we lean heavily into those two industries. We also, obviously focus a lot on e-commerce and e-marketplaces where you're trying to, by definition, the changing nature of those interactions is also driving a lot of change. And if you're not careful, lots more friction in the way the transactions occur. So that's our view, and that's where we lean in. Thanks, Jennifer.
Thanks, Brandon. That's great. Okay, so let's go broad and global here. Michael, we'd love to hear PayPal's perspective on embedded finance and what that's going to look like.
So yeah, thanks, Jennifer. I think from our perspective, we have a different take from some of the other panelists. We're really an enabler of frictionless transactions. Within our ecosystem, we bring together customers and merchants, and we're working to try and create a convenient and easy checkout experience wherever, however that might look. And a lot of the things that we do and products that we bring to market are all in that vein. We try to make sure that we're able to listen to our customers, listen to our merchant customers, listen to our consumers, understand where the pain points in transacting are, and work to create products that are easy and seamless to use. Things that we tend to focus in when we think about embedded finance, a use case that's near and dear to a lot of gamers' hearts, things like in-app purchases, being able to seamlessly use your PayPal account while you're playing a game to buy in-app merchandise. Those types of things are really interesting to us and experiences that we continue to work on.
Thanks, Michael. And Ellie, let's take it over to you for sort of the roundup of MasterCard and how you fit into this new embedded finance world we're moving into.
Yeah, absolutely. Thanks, Jennifer. I echo a lot of the comments that were made by the other panelists. At the core of it, how we see embedded finance, we see it as an intersection of technology and finance. And I do realize that this is a huge overlap now, but it wasn't the case. And like we are in this space and we are with all these solutions, thanks to all the work of the innovators and disruptors who have made this possible. as you mentioned, MasterCard, we are a global multi-rail payment company, and we have solutions that cover the needs of many different markets. But at the core of it, we go where the consumers go. And we are working to provide the infrastructures to the partners, whether they are on the bank side, on the merchant side, on the acquiring side, on the technology side, to provide the technology and infrastructure and the programs to make payments from one side invisible and frictionless, as Michael mentioned, but at the same time cohesive, safe, and secure for the consumers. The consumers' needs are asking for it. They are used to invisible payments thanks to the technologies that they're used to, and their behavior has changed somewhat. So we are trying to take notes from what has been working in the physical space, and we are putting a lot of focus on the digital space and what we need to support and build for. So card on file solutions, it's been in the market for a few years now. Make sure that like we make that space safe and secure and efficient. And moving on to gas checkout, which has played a huge role, especially with COVID, on the digital space. There is a lot of gas checkout volume that we are seeing. Alone in 2020, our insights show that there were an additional $900 billion in dollars globally that went into shopping online. So we know a part of it was card on file, but gas checkout was a big component of it. So how do we make sure that solution is cohesive, consistent, secure, and it meets the need of the consumers and their current behavior? And we go beyond that. We have cross-border payment solutions. We have buy now, pay later, and we are continuously going where the consumer needs are going to build the infrastructure, the ecosystem, and the program required to meet these consumer needs.
Thanks, Ellie. I'd love to dive in further with what Ellie just presented to us. And that 900 billion number is the first time I've heard that. That's incredible, just truly incredible to think of the last 12 or 15 months that we've moved towards this. Okay, so let's talk about how consumers are truly driving where financial services are going now. We probably all believed that maybe even before the pandemic, but there is like no doubt now that we know exactly that is the way that it's going. So I'd like to ask our panelists kind of a two-point question. One is, how does that affect either the experience or the choices of what consumers have and what offerings you need to provide to meet those? And then also, what is needed from an infrastructure and an ecosystem perspective? What do we need to keep pushing into, or that's not quite there yet, in order to meet these needs? Michael, would love to start with you.
Sure, thank you. So I think really when you think about embedded finance and you think about the shift to digital over the last number of months, it's really around how consumers now consider the app, the product, whatever their platform they're using, they consider that to be the product, and they are looking for simple, holistic, embedded, and direct experiences. They're really looking to make sure that they can get in and out, transact the way that they want, get whatever item, good, service that they're looking for, and be able to do that seamlessly, safely, securely. And so, for me and at PayPal, like I said before, we act as an enabler. PayPal doesn't tend to be a destination app. We're not a place where people come to hang out online with us. We're a transaction app. And so people are looking to transact with us through other experiences. And so one of our core activities is always to expand our service and offerings to as many merchants and consumers as possible, so that we can transact with them while they're using Uber or Lyft or buying something through the Play Store or an app store. So I think it's a little bit different in terms of the consumer demand. Their expectation has really increased over the last number of months. And in terms of what we need to do to continue to push the ecosystem forward, I think in my mind, there's always this question of access. And especially for new digital services that are evolving and being considered and being deployed. It's getting them access to services, specifically financial services, so they can embed that kind of seamless activity within their app. And so for PayPal, we offer branded and unbranded style checkout, and we're able to give them a leg up and give them an ability to start accepting payments, when they're very small and just growing their business. But as they grow, the needs become a lot greater, and their requirements for other embedded finance products become greater. And that's when I think you start looking at banking as a service. You look at prepaid as an ability to store value and to continue to engage with customers. And so that's where a lot of these new businesses are heading in terms of embedded finance. They have a need based on the consumer demand for a frictionless and direct experience to be able to offer stored value, or to be able to offer loyalty, or to be able to offer buy now, pay later solutions and the like.
Thanks. I love that line. The app is the product. It's so true that that's how consumers look at this. It's not how we necessarily look at it, but it's a good reminder that that's, again, back to the last session, it's not about the product anymore. It's about the consumer need. This is something that our industry needs to keep, leaning into. Kelly, I'd love to get your perspective on this. You have a global look for us, both with NetSpend's business in the US, but then global payments around the world.
Yeah, I think I want to pick up on a couple of things Michael said, and we take a slightly different view. Being in the prepaid industry or payments industry in general, we think a lot revolves around us, and that's not actually the case. What consumers do is their lifestyle and their fundamental needs drive a payment decision or a payment choice or a payment transaction. And so I think where we see things going is people don't necessarily look for a financial product. They look to satisfy a need of insuring their home, or getting a line of credit to go buy something, or a transaction that they need to conduct that needs a payment instrument. And so I think what we need to do now as an industry is make sure we tuck ourselves in these other end-to-end life cycle and lifestyle experiences that are really driving that behavior. Because usually your payment choice is either at the front end when you set it up as the default choice, or it's at the back end when you choose which mechanism you as a consumer wants to utilize to conduct that commerce transaction, or to follow through on whatever it is you're trying to accomplish. And so we've started to look more broadly at where can we fit into that broader consumer experience and make sure we have alternatives and options, whether we've been able to convince the consumer or small business to preload funds for that transaction, or to make a choice at the back end that's as seamless and frictionless as possible. And so I think we're trying to go a little bit broader to make sure this works not only for us, but for the end customer as part of that lifestyle experience. But the other thing is, while we're all trying to make it simpler and easier and frictionless and low touch, the harsh reality is there's a lot more players in that ecosystem. And so everyone needs to really understand where they fit, how they can integrate, how important it is to communicate with partners across that broader ecosystem, and make sure those handoffs are happening appropriately and seamlessly. And sometimes we kind of get very focused on our product or our service or where we play the role. And I think we need to step back now and think a little bit broader and try to make that entire experience and the role we play in it as valuable and as seamless and as frictionless as possible. So I think we need to go broader. I think we need to appreciate the partnerships that exist within those ecosystems more. We need to learn how to integrate differently probably than we ever have before. And we need to understand is us in the payment industry is not necessarily driving the formula, but we're playing a role in a much bigger lifestyle or commerce decision.
Those are great points. And Kelly, not to put you on the spot, but I feel like this is a good example of the work you're doing in sports and entertainment. Would you mind just talking for a minute about that? Because I do think it's a great example of what you were saying, trying to bring in all these disparate players together. It's a consumer right in the middle of their lifestyle. Would love to just hear a bit about that.
Yeah, I'll talk recently about a deal we did with Austin Football Club, the first major league sports franchise in Austin in Major League Soccer. Our objective was to support the team with the fans' experience in stadium and outside stadium. The objectives were make it contactless, make it seamless. We've installed technology at the point of transaction for contactless payments or EMV transactions. We'll be having an embedded wallet that is part of the Major League Soccer experience and the Austin Football Club experience. We're going to try to provide cards for people that come to the stadium that only have cash to get them comfortable with that contactless experience. There's integrators, there's technology people, there's how Austin Football Club wants to present themselves to their fans. And so the payment piece, and we're the preferred payment provider, but we're really part of the overall fan experience in stadium. And then how does that extend when the fans aren't there, but how can they participate with the club, with the players, with Major League Soccer? And it really has turned into a broader lifestyle proposition that we're trying to pull the pieces together to control that ecosystem experience in stadium, but extended outside the stadium so they can have good experiences as an Austin Football Club fan overall.
That is super exciting, and I think one of the best examples of embedded finance really coming to life in a tangible way for people who experience it. Howard, I'd love to get your perspective on this as well, because obviously People's works with a lot of great, exciting startups, disruptors, new use cases. So tell us a bit about sort of your perspective and what you're seeing.
Yeah, kind of what, Michael said, no one's hanging around the bank looking for term deposits and mortgages, right? We're an afterthought, and we're a consequence of a consumer choice to do something. And consumers today expect simplicity. They pay for things with their thumb or their face. They order groceries, online. They make major purchases without going into stores anymore. And I think the demand is why is it when all of a sudden I need to get a loan, or I need to open up a rewards account or a savings account, or I want to transfer some funds, all of a sudden that experience kind of breaks and falls apart. And I think the expectation, from the consumers is, get these financial products embedded in the choices that they're making, whether they're checking out a merchant, or whether they're part of a rewards program, or they're at a stadium trying to pay for something. If they don't have that access or that particular product today, almost certainly the application that they're interfacing with has information about them, their name, their address. Why can't that data be shared with, hey, share it with the bank, help me get that, if I'm an Uber driver, help me get that auto loan. If I'm a skip the dishes driver, help me get into a new vehicle. But they don't want to use their balance sheet and hey, just go, walk down the street to your branch and go figure that out. So I think it's really important for us as a financial institution to make those API hooks so that we can get the data from our partners and really enable them to empower the consumer to decide, yeah, I do want to open up, a rewards account, a term deposit account, a CDIC insured bank account, whatever the case may be. And I think that's ultimately going to, reduce abandonment from the application or customer friction. And look, but we have to remember that these things are highly regulated, right? So, while everyone would want to just, unlock their phone and push a, or put their thumb on their phone and get a mortgage, we know that can't work that way, right? There's checks and balances. We have to, make sure that the customer meets certain regulatory requirements. So it's our job to make those APIs available and reduce the friction for our partners to deliver those experiences. Frankly, what we think will be in a better way than the traditional way of just dealing with your branch. And, even if you have a relationship with your bank today, it's probably a very frustrating experience every time you have to do something with that institution. So I think partnering with, the fintech ecosystem and embedding those applications within the product offering is going to make a tremendous difference, and part of our growth strategy for the next decade.
Thanks, Howard.
I just wanted to add one quick thing, and I think it's a great call out. It's about the convenience of having the banking services embedded within different applications. This is the trend. I think that everyone can identify that customers are looking to have things happen in context. While they're doing a particular activity, they want to be offered embedded finance options in context of that activity. When you're looking at adding an in-app purchase, you don't want to be solicited for a mortgage. It doesn't make sense in that context. And so I think that's really where a lot of the industry is moving, is looking at that contextual finance offer to make sure it makes sense for customers and increases the value and that they get transacting with the platform that they happen to be on.
Thanks, Michael. That's a great point. Let's switch to talk about small businesses. So as we all know, small business has been really ravaged over the last 12 to 15 months. And they have also kind of finally maybe hit a tipping point with respect to digital modernization. As we all know, small businesses and just B2B payments have been really the laggards of moving to digital. And we've seen finally a big chunk of movement out of necessity over the last 15 months. So I'd love to know what our panelists think about what's really needed to accelerate the needs that small business have moving out of the pandemic. And Brandon, I would love to start with you, get your thoughts on that.
Yeah, sure, happy to. So, I think firstly, you're right. The last 15 months have really exposed any manual processes, things that were being done that perhaps weren't broken, were working, but as soon as you had to have people out of the office or your customers who were paying you with physical checks, for example, if they weren't in the office, you weren't simply getting paid. So I think a lot of that stuff that has been around for a long time, just not been a priority, really got reprioritized in the last 15 months. I think the piece so I think there's a really interesting uptake from small business. I think the other interesting thing for us to what we see regularly is that small businesses desperately trying to really insert themselves into the credit cycles. They don't necessarily have access to as much working capital and to the sorts of lending capabilities that their bigger counterparts have. There's still all kinds of challenges depending on the market that you're in, and actually underwriting small businesses, particularly newer and younger small businesses. So I think that remains an ongoing challenge for that sector overall. I think in general, there's been a pullback of lending into that sector during the pandemic. I think it was one of the sectors that most traditional lenders felt anxious about, and so have pulled back a lot of the lending that they've had. We're starting to see some of that come back now. But I think the really interesting opportunity that sits in front of us, and linking it back to the conversation that we were just having about these consumer type experiences, is whatever our consumer experiences are like, they bleed into the business world eventually. It's just a question of time. And the expectation level goes up from all of these customers that you work with of, why is my business experience not similar to what my consumer experience is like? And I think in the small business case, that is very definitely true, because although B2B is generally more complicated and lending and providing services to small businesses can be more complex, in a lot of ways, they can interact with you and operate with you much like a consumer does. In a large organization, there are multiple people that might be involved in making a purchasing decision, as an example. In a smaller organization, there's probably only one or two people. And so I think small business has actually got the potential to be an interesting way for us to transition from how we interact with consumers to how ultimately we deal with large, complex organizations, and small businesses could be the bridge.
Thanks, Brandon. Great perspective. Ellie, I'd love to get your thoughts on that.
Yeah, it's really interesting to hear what Brandon had to say about small business. I mean, the trend and the shift to digital, I think it's pretty well known at this point. And we do have the early adopters who went into override, and they won big But at the same time, we do have these laggers, the type of businesses, I don't want to categorize them as specifically small business, but the type of businesses who couldn't adjust and shift to digital as quickly as they should have. But fundamentally, when I think about small business, how they do business has not really changed. It's just the consumer behavior and some of the expectation has changed. Their sales and services might have remained the same, but the way they transact and the way they get their funds or access to funds has changed. And COVID definitely accelerated this shift and maybe forced some of them to make fundamental changes on how they do their finances, not specifically their businesses. And what we need to make sure is that coming out of this pandemic and this shift, they don't go back to what it used to be. And when I think about that, fundamentally, the businesses or small businesses specifically, they want to be able to, request payments and do invoices and get access to their deposits and their funds as quickly as they can. And then they do bills and vendor payments. But at this point, and the way our rails are infrastructured, this is not real time. And sometimes this makes them shift into and revert back to how they used to do business, which was cash-based or check-based. So with payment modernization and the infrastructure that we're building in Canada specifically, having access faster to funds fundamentally makes a shift into how small businesses would do their finances. And again, global company, multi-rail, what we provided MasterCard are the rails to make it possible. So it's the art of the possible. And then it's providing the ecosystem or shifting the ecosystem into a better consumer journey altogether, because you all know that consumers' behavior has changed and it's here to stay. It's just how do we take these laggers and adopt them into the digital space so they don't revert back to the old ways.
I just want to add on to what Ellie and Brandon said, is that we're talking about embedded finance. It's not just for consumers, it is for small business. As a large acquirer, there's no reason that merchants can't have the same experience of same-day payments, immediate gratification that we're focusing on the consumer side. And this is happening a lot south of the border, and coming to Canada is, large players are providing, the merchant account is becoming the bank account, right? So as you're processing transactions, you're also able to pay bills and get access to those funds. And it's not just, your bank account is separate from your deposit account, is separate from your cash management account. And I think what we're bringing to the market in Canada as both issuer and acquirer is the ability to allow merchants to process transactions and immediately use those funds whichever way they want to use them. They want to use it on a debit card, great. They want to do a bill pay, request money, and e-transfer. So, embedded finance is not just consumer facing, but it's also empowering, especially now for small businesses where access to cash, access to capital was really, the taps were turned off in 2020, that any acceleration that we can do on payments or any way that we can get more intelligence around, hey, I'm processing your transactions. I know what you're doing. I know what your seasonality is. Why can't I originate a loan to you based on that data? That's not necessarily a separate company from a separate cash advance firm that has different, repayment rates and high interest rates. So I think embedded finance is both on the consumer side and certainly on the small business side.
And Jennifer, I think we can't also forget about the employees that small businesses too. We spent a lot of time talking about liquidity and making sure a small business operating model is effective from a financing point of view. But actually, small business is driven primarily by their employees. And so that flexibility, either around working hours or how you pay them, are you going to provide early earned wage access to their funds? You've got to look at that other side of the equation too, around employee well-being, tying that into the overall small business approach and operating model. So we can't forget the employee of a lot of these valuable small businesses.
Absolutely. Yeah, I was going to say the payroll card, the tip out card, the cash out card, the ability for people to access funds that they've earned in a day. Again, it's, no one's going into the small business looking to get a new deposit account, but if they can access their funds immediately once they walk out of that store and be able to move it seamlessly back to where they want it to be or spend it where they want it to be, everything kind of ties together, comes back to that, bringing that financial control back to whoever that is, the small business, the employee, or the consumer.
Yeah, that makes sense. Howard, I wanted to ask you to, Ellie brought up payments modernization before, and just sort of real quick, so we address it before we get off in the next 5 minutes here. What do you see as sort of the unique challenge or opportunity for payments innovation in Canada? What do we need to do, and what really needs to happen at this point?
Yeah, look, this is an ongoing topic that comes up, often, and we have to remember that, Canada started late in payments modernization. Europe, in the UK specifically, started their e-money licensing in 2000, 2003. They're 20 years into Payment Service Directive version 4 or 5, whatever they're at, right? And we're starting late. It doesn't mean that we have to take 20 years to get there, but we forget that when we look to Europe and we say, well, look what's going on in Europe, look what they're doing. They're building on a foundation that's been going on for 20 years. Canada only recently allowed, smaller institutions like People's Trust to become direct connectors, to the Bank of Canada. So we're in the US, you have thousands of small banks that connect directly to the Fed. There hasn't been a new direct connector in Canada since 1984. So we have to remember that while we can accelerate and we can skip the landline and go right to the cell phone, right, like some countries, we have to build that foundation. I think it's important to make sure that we continue to push governments to make sure that the regulations that they're bringing out make sense for today and tomorrow, more importantly, as opposed to the past. There's often, there's new regulations that have been come out recently that really that affect prepaid, right, in terms of the new FinTrack regulations as of June 1st. And while we understand why the government did that, we think there's a lot of unintended consequences that they have, that the net is very wide and it's catching a lot of new innovative use cases. So I think Canada needs to experiment a little bit more, have some, sandbox type of technology, but we have to just, keep the eye on the ball, is that we have to keep on pushing and not be distracted by, what Europe is doing and what we have to do what's right for Canada. And, I think we're well on the way there, but it's a long time coming.
Thanks so much for giving us your perspective on that. So we've got about 3 minutes left, and I'd love to close out with a question posed to any and all of you. And that is to really, truly, realize this vision of embedded finance. What's one thing that we need or that we need to be better at, or a prediction you have kind of for the next year? And then if you have a perspective, what's Prepaid's role in this? Maybe Michael, we'll start with you.
So really, when I think about the future and what's going on, I think about all of these, new digital experiences and platforms that are starting to be innovated and developed. And a lot of these folks are really, computer scientists, engineers. They're developing a user experience from a particular point of view. They're not financial experts. They're not embedded finance experts or payments experts. And so for them, it's really about, being able to link to finance modules, being able to pick and choose a few different providers, surface options to their customers. They really are looking for plug and play ability for any and all of their embedded finance needs. And I think really when it comes to what we're talking about here in prepaid specifically, prepaid's really well positioned to become one of those modules, with easy connect APIs, with discoverability, with good access and capabilities that you can deliver to all of these new applications and platforms that are being developed. There's an ability to become embedded within the developer community and let them know they can easily connect and offer finance services to their customers in context in their user experience.
That's great. Brandon, thought from you on the business side.
Yeah, I think the single biggest challenge that's creating friction in the market today is really being able to identify companies and the individuals inside the companies. I feel like we're a long way down the path on solving this for individuals and for consumers. but really it's not easy to get access to the data to really validate, is this a valid company and is this a valid individual within the company? And if you think about everything that flows downstream from that, I think it's one of the biggest barriers to a frictionless experience today.
Thanks, Brandon.
Jennifer, from my point of view, I think regulation needs to catch up with consumer expectations and demand in technology. I think it will hinder a lot of the things we're talking about today unless it's viewed a little bit differently and a little more progressive. And I think we all need to take it seriously, but try to really encourage the regulatory environments to catch up a little bit, because the horse is bolted and technology and consumer expectations run way ahead of the regulatory environment.
Thank you. Howard or Ellie, final thought? We've got about 30
final
seconds.
Thoughts, just echoing a lot of the things that the other panelists said. Yes, we are behind and we are working on infrastructure, but I think the consumer demand and their need and the pace of innovation is pushing us. So I'm hoping that we won't take 20 years to get there, and I'm hopeful. But the idea of plug and play and offering it in scale, like how do we make the access to these products easier and scalable, is something that I keep in mind whenever we're talking about a product, because ultimately we're not just innovating for the big guys. We want to make sure that we have global reach for every type of business and consumer.
Yeah, just to close out, I think prepaid is the ultimate embedded finance, right? The prepaid of today is dramatically different than it was in the past. It has direct deposit, it has CDIC or FDIC insurance, it has bill pay. I mean, it is sometimes indistinguishable from a bank account. And so we have to really, look towards the future and what people expect from their digital accounts or their financial providers, and stop thinking about, well, prepaid is different than, a DDA account is different than a line of credit account. They can all be delivered in the same way in a compliant fashion. And, we think that the prepaid rails and the ecosystem that's been built there, a lot of innovative things can be built in the future on these new types of, cores, and not have to worry about the legacy infrastructure that the larger banks have to worry about.
Thank you. That's a great note to end on. I appreciate all of you. That was a great discussion. Thank you so much for your energy, all of your insights, and a candid discussion about these topics. We appreciate you all joining us today.